Welcome to the ARMR Report Stock Market Wrap-Up. I am your host, Brett Rosenthal. I'm the creator of this website and, of course, the creator of this YouTube videos. The ARMR Report stands for Algorithmic Risk Management Research. I consider it armor for your portfolio. This website, this YouTube channel and the website we created for you is designed for the individual who's managing his or her own assets, realizes it's a monumental task. And if you understand the importance of information and also the importance of learning how to get that information, then this channel's for you. Perhaps the website is for you as well. It's armrreport.com, ARMRreport.com. Now, I intend to do an end-of-day wrap-up for you every day like this. This is our first one, and so we're kind of learning as we go to figure out what we want to talk about. But today what we're going to cover are highlights from our trading session. Now, as an ARMR insider, a subscriber, you're part of an ARMR Slack trading desk where we're sharing information as a community all day. We're doing exclusive videos all day. In fact, we spend the first 2 hours of each morning focusing on day trading, where I share my screen and we walk through the process of VWAP trading. And so what I'm going to do today is share with you some of the highlights, both the good and the bad, right? We're going to learn from our successes and failures together. We're going to go over the stock market direction. We're going to highlight a specific group that we're focusing on now. And what I want to do at the end is just wrap up with some of my thoughts about my year-end resolutions as an investor, things I want to focus on in the new year. I'm going to share with you 4 resolutions I've got, and I'd love to hear what yours are. So when we're done with this video, feel free to just comment in the bottom here, and let's build a list together, and then we'll be able to focus on that list over time. Look back on this maybe a year from now. I'll have this list together and we'll see how we did. All right. So without any further ado, let me remind you that the information I'm sharing, this armor as I call it for the portfolio, is what I use to manage my own personal assets. So the information I'm going to share, really is my information I used and I'd use every day to manage my net worth. I'm not telling you what stocks to buy. I couldn't possibly do that. I don't know you, right? But I can share with you my successes, my failures, the 30 plus years of experience doing this, and hopefully over time help you become a better steward of your own capital. And at the ARMR Report, we believe that starts by managing risk, and we capture upside second. So it's a little bit different than most carnival barkers you hear, right? We're not going to talk about buy the stock, it's going to go to the moon. Okay, the number one way to increase net worth over a 12-month period is to stop losing money. Okay, you start there, that's the foundation. And then you build assets by capturing upside at the appropriate time. And we do that through a 3-stage process at the ARMR Report. Okay? That process is stage 1, we build our whiteboard. We do research to find companies we want to own, and we constantly upkeep that ARMR Report, what we call the ARMR Whiteboard. You can call it your own whiteboard, right? And we lift out of that whiteboard the top shelf ideas that we want to focus on and never miss. The second stage is to use algorithms to help us determine when to commit capital, when to take it out of the market. We have algorithms designed for the big indexes, and I share that information with you every day, right? We also have algorithms for groups and individual stocks. That's our execution piece. This is called fundamental investing. So it's the quantitative part that goes together with the fundamental foundation. That's the information edge I'm sharing with you. And the third stage is our stop loss discipline. Okay, and these 3 things together create the armor for a portfolio that helps you grow net worth and protect it. That's the point here. All right. So let's dive in first and look at just the S&P, I like to start there so I know where we are in the process. By the way, if you enjoy this, give me a thumbs up. That'd be great. It would help me out. Of course, you can always subscribe to this YouTube channel or our website, armrreport.com. Right down here, I have a link for you. All right. So let's just take a quick peek. As always, those of you who know us from Saturdays, I'm going to keep this brief today, okay? We're not going to go for an hour and a half like sometimes we do on Saturday. We're going to try to keep this to under a half an hour. So here's the S&P you're looking at. We have an Andrews fork that we've been following. What you see here are the arrows, okay? We have the ARMR risk monitor that we share with ARMR subscribers. And it's a basic guide, just a simple green, red, yellow arrow light, whatever you want to call it, okay, that lets you know what the big indexes, what our algorithms are saying about the big indexes. Should we add risk? Should we take it off? So if you look back at the beginning of the year, we were taking off risk on this arrow right here at the beginning of February. The market collapsed. We put on risk right here near the bottom. And then, of course, these arrows show you where we were taking risk off and putting it on all year. Right now, we've gone from green, which was early November, into yellow, and we've just been following this market up as it curls up the center of this Andrews fork. And the Andrews fork is important because it's a fork created by the Fed, right? The reason we're on this trajectory is because we have ridiculously large, and that's not a commentary on the Fed being ridiculous, it's just an enormous, open-ended, large campaign of capital creation by the Fed, which is driving asset prices to the moon, okay? And we're seeing, without a doubt, clear bubbles created in certain asset classes, right? I mean, right now we're seeing Bitcoin go berserk, okay? So that's all created by massive currency creation from the Fed, right? And stimulus packages, one after another. Okay, and that's what creates this uptrending channel. So real quick, touching on it, the indexes look fine. The ARMR algorithms continue to tell us risk on, so there's nothing really to change there. But we're in this mode of managing success, we like to call it. When we're risk monitor yellow, we're managing success, booking profits as we go, raising stops as we go, rotating capital into new investing opportunities at the beginning stages. That's the plan, okay? And so we look at, the IBD 50 as an example of the disruptive growth sector of the market. 1, 2, 3, 4 up and out. Had a pullback for a couple days, holding on up here. Doesn't look too bad. The momentum index, there are 7 index algorithms we use. I'm just showing you the chart patterns. The algorithms run behind the scenes. And for our index only portfolio, and then we take a moment to just break here and share with you some changes we're making at the ARMR Report. So we always have 3 portfolios. These 3 portfolios are different styles of management, and I use them for my own personal capital. So one portfolio is index only. All we do is use the algorithms to buy and sell the big indexes, the top 7, the magnificent 7, if you will. S&P, Dow, NASDAQ, small cap index, momentum, value, and IBD 50. That covers the whole market for us and shows us direction, all right? And so we are, aggressively long, aggressive being fully invested in the market indexes, all right? And we haven't changed that. And as I show you these indexes, there's no reason to change it, okay? So they're just crawling up uptrends is what's going on. I'm not going to go through every one. You get the basic idea. That's the Dow right there. What we have been doing at the ARMR Report is we have 2 other portfolios, what we used to call aggressive and conservative. But I've decided to change those terms because it's not really reflective of what we're doing at the ARMR Report. The ARMR Report incorporates this 3-stage process of managing capital, right? Build a whiteboard, use the ARMR algorithms for execution information, and use stop loss discipline. So what we're really doing in the aggressive portfolio is that we trade more aggressively. we use tighter stops to protect capital, and we book profits faster with tighter trailed stops. So I think most of us would call that swing trading, right? So let's call it ARMR swing from now on, because that's really the experience. Is it possible we'll own a position in that portfolio for 12 months? Absolutely, right? Could happen in the right environment. But typically, we're going to use more aggressive stops, booking profits faster, rotating capital into new ideas, so there'll be more trading activity. In the ARMR Invest, which used to be called conservative, but really what I want to call it is invest. It's not necessarily a more conservative way of running money. In fact, some of you might think it's more aggressive because we're going to use more accommodating stops, right? We're going to trade less as long as an asset stays in an overall reasonable range, and that range will be a bit bigger. So what does that mean for you? In a bull market, that ARMR Invest might outperform the swing portfolio. It'll trade less, it'll pick up positions, it won't get stopped out. In a ripping bull market, you're gonna see a powerful move there, right? The flip side is there's greater risk because our stops are more accommodating. Okay? So there's going to be more volatility in that portfolio and we avoid trading it. And so I put these three portfolios together for my own assets. I literally divide my assets into these styles of management and I get a diversified approach. So you don't diversify by buying 100 stocks and you don't fool yourself into thinking I should buy the emerging markets to help me diversify, because that doesn't help. Okay? What helps you diversify risk, and the ARMR Report's about risk management, what helps you diversify risk is styles of management, not asset classes. The world we live in today, when the market goes down, every asset goes down with it. Just look at what happened in February. There was no place to hide. Unless you're an ARMR Report subscriber, and then you didn't have to hide at all, right? Because we used our execution strategy, we raised cash, went to 100% cash. But even if you looked at February, what went to cash first? ARMR Index only. All 7 got stopped out in one day. ARMR Aggressive and ARMR Conservative got stopped out later in the week. And so that's really why I'm changing the names, okay? So, what I wanted to do was take a peek at the Spotlight group today. All right, from today's action, we've been eyeballing this group for a while. We made a lot of money in this group earlier in the year after the market collapsed, and we're back at it again. And let me share the chart with you. Okay. We are adding shares, and I'm going to start with this idea right here, SILJ, of the precious metals mining stocks again. Okay, it's hard to argue with a chart pattern like that. That's first of all. Second of all, we've been waiting for this for a while. These are small cap silver miners. And I highlight this first, and I want to give a shout out to an ARMR insider, a subscriber, who brought this to my attention today in the trading room. And this is part of the beauty, in my opinion, my humble opinion, of the ARMR Report. I believe that we all, as subscribers, all of us together, are an army of analysts. And we're backed up by a tank division of algorithms to capture alpha, right? As one person, I can't cover everything. And I've really got to hand it to the community of ARMR insiders. This year, you guys have been great bringing ideas to the table in our Slack room during the trading session that allows us to capture upside. And SILJ is a perfect example of that, right? Because we're looking at our whiteboard and we see our favorite mining companies. A lot of them were small cap silver miners. Then this ETF comes to light, okay? So we look at SILJ, we look at GDX, and we look at GDXJ, okay? These are the top 3 in our opinion. There's more, there's others you can trade. These are the top 3 precious metals ETFs. And what I'm saying today is we are beginning to commit capital again to the precious metals space. Now, those of you who know me know the ARMR report, know we committed capital to this space in an aggressive way in late March, okay? So if you look at, let's just go back and look at GDX, okay? Back here when the market bottomed in late March, we had about 50 to 60% of our capital in precious metals and precious metals miners at the bottom of the market. And it served us well when the market first took off in here, okay? And we've been out of this group more or less, since the month of August. Okay, and the markets, you can see these stocks have just traded all the way down to the 200-day moving average. Made a very tight base with higher lows and lower highs, making what is a little pennant here. Okay, now we could wait if we wanted to one more day for this thing to gap out to the upside tomorrow morning. But what we're doing here, and I'm going to get to my investing New Year's resolutions, but this is one example of it. I'll get to that in a minute. What we want to do is try to buy our positions, try to take our positions. Hey, I got to call you back. Got to try to take our positions, still a live trading desk, guys. Got to try to take our positions as close to the stop as possible. That's our job. Okay? So what we want to do is put capital to work close to the stop. The stop, obviously, in this position for GDX is literally the low of today's trading. If it takes out today's low with a certain offset, which will go back below the 200-day moving average, we'll exit this position. But should this position take off tomorrow, we may increase our position size. We may add other names to the portfolio. Okay? So GDXJ is another example. Look at how today's entry point, the low of today is the stop. It should take us back below the 50-day moving average. But should this asset take off tomorrow morning, or all day tomorrow, let's say, okay, we may increase our position size. We may begin buying individual stocks. We don't know. We'll have to share this information on the trading desk with ARMR insiders tomorrow. We'll be looking at these names first thing in the morning for ARMR day trades that, if they go well, may end up being positions that we add to portfolios for a longer term investment opportunity. Okay? So a couple thoughts for you. If you're completely non-versed in precious metals and why they should be owned in a portfolio, I can't get you up to speed tonight. Okay, we could talk about that on Saturday, 11:30. That's when we do our weekend review and we get more into detail about these things. Suffice it to say, I'm going to share this chart with you real quick. Okay, this is a chart of the US dollar. Now, if you're following me on Twitter at Brett Rosenthal, B-R-E-T Rosenthal, and if you've subscribed to the ARMR Report email list, right? It's just a free email I send out periodically when something important happens. I shared with you this chart pattern way back in July. Major head and shoulders top on the US dollar breaking down, right? And now it's accelerating lower into the end of the year. Make no mistake about it. That's a major reason Bitcoin is going through the roof. Okay? But Bitcoin's not going to replace precious metals. Okay? It's not. It's going to have its place. So will precious metals. For those of you who follow MP as an example, okay? MP is an asset called rare earth. These are minerals that go into, materials that go into all types of electronic devices. Okay? Silver is a major component of electronic devices. What we've got right now are two pieces coming together for the precious metals play. Number one, the US dollar is imploding. Okay? It's been going down all year and it's accelerating lower. Number two, we've had a supply constraint all year. And as the economy reignites, silver is an industrial metal, guys. It's not just a monetary asset. And that's why the silver stocks, particularly small cap silver stocks, are leading the precious metals sector higher right now, which is a really good thing because typically if you go back over decades, silver leads gold, mining stocks lead the metal. These are just basic thoughts for you, right? They're anecdotal, right? But we see this happen a lot. And we're seeing it happen right now. One reason why we're seeing small cap silver stocks start to really take off, and ARMR Insiders, we can go over our whiteboard tomorrow, and you can take a look at what's at the top of the whiteboard of our favorite small cap miners, okay? But one of the reasons is, in a shortage like this, we believe 2021 might be the year we start to see acquisitions where the big guys take over the small guys. Okay? So we've recommitted ourselves to this space. We did it today. And depending on how it behaves over the next couple days, we may be adding to it. All right, so stay tuned. We'll talk about that tomorrow night if there's something to talk about. I wanted to share with you now, before this gets too late, we got about 10 minutes left of the show. I'm going to walk you through a couple of day trades. So every morning, for the first 2 hours of trading, really at the request of ARMR Insiders, and it's turned into something I really enjoy, I'm sharing my screen and I'm walking you through step by step how we use the volume weighted average price to day trade on our desk. We like to do what we call what most people in this business call mean reversion trading. So we trade around the mean and we use standard deviations above and below the mean to help us understand where to enter and exit positions, okay? So I'm just going to walk you through a couple of trades today that came off our trading desk. And really, in one case, well, let me just share it with you. Here we go. So let's take a look. I'm going to take a look at SILJ just to go over. This was not a trade from our desk today, but it's such a clear example of VWAP trading that I'm going to share it with you right now. All right, our favorite setup. First of all, what you're looking at is a graphic representation of an ARMR algorithm. It's an algorithm designed to help us day trade. We call it the Price Movement Profiler. What we do here is we have the VWAP. This is a 3-minute chart. So each bar is 3 minutes. The VWAP are the black dots. It's the volume weighted average price. It's the real price that an asset is worth. Everything around it is noise. And so what we look to do is trade around that core price. All right? We have 1, 2, and 3 standard deviations above these black dots, 1, 2, and 3 standard deviations below. We use an opening range of 15 minutes, a high and a low, and off of those opening ranges, off of that opening range, we have Fibonacci extensions above and below. We also use the average true range above and below. These are all off-the-shelf ideas that you could find in basic trading software, but we've infused into them our own calculations of volatility. So it's a bit different than what you might find if you just download it on your own. I'm using TradeStation as my software of choice. But you'll get the gist of what we're trying to do. So what we have here is this is the daily break. Right here's yesterday and today, okay? So we have yesterday's VWAP. The asset closed right below it. It gapped above yesterday's VWAP. That's stage 1. That's step 1 of our day trade. Step 2 is the minute it closes above top day VWAP, so now we're above yesterday's VWAP and today's VWAP, is when we get long. This would be the bar right here, which is really the third bar of the day at 9:39. We use a stop of the low of the bar we bought or the low of the previous bar, depending on what we're buying. Okay, so either we bought this bar at 9:39 or you buy the next bar 9:42, in which case you use the 9:39 low as your stop. You'll notice that the trades that work never challenge that stop. So if you get stopped out, you're saving yourself a hassle, and it allows you to rotate into another idea looking for the explosive move higher. Okay? So you hop on the trade right in here at 942 probably. Okay? Stock never looks back. This is SILJ. And there's two techniques we use to book profits. Number one, the ATR high of the day, which is this teal line up here, okay, that I've highlighted with those white squares, okay? When we get up there, we look to book some of our profit. Now, this is just the way I like to trade. You could do whatever you want. But when we get up to the average true range high of the day, and this again is an ARMR ATR, so it's not necessarily the one you're looking at. You have to work on figuring out what is right for you. The average true range obviously is an average of something, and that's the secret sauce. You got to find the right average for the way you trade. Okay? How many days back are you looking, for instance? So we would always book some profit at the ATR. We would raise our stop at that point. So there's no possible way of losing money at that point. And that's the best position to be in. Once you're in that position where you've booked a profit, maybe 20, 25, 30% at that price, and you're carrying your core position, and you raise your stop to whatever you want to make sure you capture, making sure you make money overall in that trade, you can then leave it alone and let it trade all day. Now, typically what I would do is use a 3-bar reversal to exit the rest of the position. So right here would be the exit, having entered down here. So let's say you enter at the end of this bar, which is 1582. You'd book some of it up here at the ATR high of the day, which is 1616. Okay, and on a 3-bar reversal, you'd be out of the rest, which let's say the close here is 1605. Right? Profitable day. Now the whole thing reversed and skyrocketed again. That's a whole nother trade. Right? You could trade a pullback to the VWAP that holds, and you pick up the stock again as it accelerates off VWAP, probably this bar right here, using again the low of the previous bar, which would take you back below VWAP as your stop. So the real way to trade this asset, in my mind, is to book some profits at the ATR, step out of the rest on the 3-bar reversal, step back in on a move back above VWAP, because what just happened here was proof that the volume weighted average price is holding, and then it's off to the races all day. I mean, you're holding this right to the close. All right, let's move on. Here's a trade from our trading desk today. NK. 3-bar reversals on a time frame. Each bar is 3 minutes. So that's a 9-minute reversal, right? We picked up NK. This is a trade right off our desk from this morning. I was sharing my screen, and at 9:42, we were getting long this asset. NK, say it closed at 1371 on that bar, the 942 bar. And as you can see, it just rips higher. So some would be booked right here at the ATR high of the day, which is, what was that, 1474, up from a close of 1371. So you're talking about $1 on that, right? And then it kept on going. Now here's the first 3-bar reversal. Boom, boom, boom. You would be out of this trade right here at the end of this bar, which takes you back below the ATR. Trade's over. Okay? Now, some of us on the trading desk, I know some guys on the trading desk actually re-engaged and put the position back on right here at 1048 since it touched VWAP and reversed. Okay? And of course, if you trade it quick, you could make some more money again. It all depends on how fast you trade. Okay? But that was a trade off the trading desk. And the way I trade is I didn't trade this again. I just picked it up right here, made my money, out for the day. Thanks for playing. All right, now here's a trade that I really, oh my goodness, did I leave product on the table. Holy smokes. Made some good money here, but not nearly enough. This is Baidu. Notice how these trades are all the same. The setups are the same. Okay? The volume weighted average price, these black dots, here's the prior day close. The stock closed below the VWAP, gapped above it this morning. What we do is we buy the first bar that closes above VWAP. So really the bar we were buying is right here. Okay, the close on that bar, because the first bar of the day closes above VWAP, that's not good enough. So then I wait for a couple bars to see what's going to happen. These are negative bars, so I'm not doing anything. But when we take out the high of that first bar, and close above it, which is 942 again. And a lot of the trades are 942, 939. Okay. You put the trade on. Notice how it never goes below the low of that bar. Those are the trades that work, guys. This isn't hard. You just use that stop and let them go. Cut all the positions that take out the low of the bar you're buying or the low of the previous bar. It's the greatest stop of all time, and it frees you up to keep putting money to work until you capture the big winner. In this case, the stock ran up here. I booked some profit on a 3-bar reversal. I booked the whole thing. So I made some money, but not nearly the kind of money I should have made, right? So look, in retrospect, I wish I'd booked some of my profit there, because this 3-bar reversal, as you can see right here, is a lot smaller. Let's go back to NK, and you can eyeball it with me and see the difference in what I really mean when I say 3-bar reversal. This 3-bar reversal is an implosion. Reverse, bang, bang. It tells me the trade's over. Okay, the stock's not going higher today. It's just ended. That's a huge move. If we go back to Baidu, it's just not that great. And so in retrospect, and I'll try to do better tomorrow, okay, on that 3-bar reversal, I should have booked, I don't know, 50% of the trade and left the rest out there with a raised stop. You could have used the VWAP as your stop. It didn't even get to the VWAP, turned around and skyrocketed. The next exit point using the 3-bar reversal, and these are not 3-bar reversals here, there really isn't, there really isn't a good one. The stock just trades sideways the rest of the day. I probably would have been out here, though, in all seriousness. If I don't get a 3-bar reversal, but I close below the first standard deviation above the VWAP, I generally exit. So I probably would have been out right here. Okay? So these are trades right off our desk today. Let's finish it out with NNDM. And I'll see if I can take a question or two, but we're going to keep it short. I'm not staying on for an hour today, okay, guys? Look at how these trades set up, guys. They're all the same. Here's the VWAP from yesterday. Stock was above the VWAP yesterday, gapped up in the morning. The second bar of the day is the bar to buy. 936. Stock never gets below the low of 936. Just rips higher all day. Goes right up to ATR, puts in a 3-bar reversal. You're booking profits here. It goes up again, puts in another 3-bar reversal back to the ATR. That ATR is a magnet, ladies and gentlemen. Learn how to use it. Did Baidu go higher after it hit it? Sure it did. Sometimes it happens. But many times the trade is over right around ATR. That trade was over. Now, here's another example of the Baidu trade. So it challenges VWAP but holds. You could put the trade back on if you want to, probably right here. And what I tend to like to do, you might say to me, well, why not put it on right here? And the reason for that is I generally like to see a bar back above VWAP, and the next bar I buy when it takes out the high of the bar that breached the VWAP. As you can see here, this bar is a down bar, so there's nothing to do. Okay? But 1, 2, 3 bars later, you take out the high of this bar. That's the bar to put a position on if you want to trade that way. I don't do it, by the way. I just get the meat. I get the white meat in the morning, in the first 2 hours of trading, and I'm usually not day trading the rest of the day. But I'm just sharing with you some of the things that ARMR insiders are doing on the desk. There's an example of a good entry point. Okay? So that about wraps it up for tonight. Those are my thoughts. I'm going to try to do this every day. I'm not sure I can commit to 6 o'clock. Could be later on some days, earlier on others. You'll just have to, watch. In fact, it would help you if you subscribe to the channel here, and then you'll get I think an email to your mailbox when the wrap up, when I'm going to do the wrap up, if you want to watch it live. Okay, so I'll take a couple of questions now, and then we'll wrap it for the night. What do you got here? Festeroso, hi. Do you still like MO? I got in. Teledoc. Have a happy new year. You have a happy new year as well, Festeroso. Do I like, let's take a look at charts. I do. First of all, don't forget, with MO, okay, MO paid a dividend that's fairly fat. It was a 9% yield, I think, right? So right here is a dividend. This is not really a gap down. It traded X dividend. So if you owned it here, the stock went down, but you got a dividend into your account, right? So you got to be careful when you're looking at charts and you're looking at stocks that pay big dividends, because it looks like the chart is riddled, every 3 months with a gap down, but it really isn't. That's an X dividend day, okay? So it went X, it sold off a bit. No doubt some people own it to pick up the dividend. Maybe they sold it afterwards, who knows? The stock is holding up fairly well in its uptrend. This is actually a position. I'm glad you asked about it. And this is why I'm changing the name of the portfolios a bit. MO is in the ARMR Invest portfolio. It's not in the ARMR Swing portfolio. I'm investing there, collecting dividends, using a more lenient stop. Okay? And probably on this asset, I'm looking at a stop that's going to have to break the uptrend that it's in. I can come all the way back to here, build the base, keep on going. I'm gonna hold that. All right. Teladoc. There's nothing wrong with that pattern right now, but nothing that really excites me either yet. So on my list, on the whiteboard, at the top of the whiteboard, nothing wrong with it. It's tight to the stop. If you have a position on, it's tight to the stop. All right, can you share what the yearly percentage on these portfolios? Honestly, if you'd like to know the questions like that, it's best if we talk one-on-one, okay? Because first of all, number one, we've had an enormous year this year. So it would be misleading for me to tell everybody on YouTube how much money I'm making right now in these portfolios. I know a lot of people on YouTube like to do that. I know guys throw money at the screen and talk about how this stock went through the roof. Okay, but the ARMR Report's about managing risk and then capturing upside. And what I'm not going to do is talk about how much money I made this year, because in reality, there's going to be ups and downs in the market. Some years open up the opportunity for huge upside, and other years don't, right? Other years are about defending capital, blocking and tackling, creating alpha when the market's down for the year and you're up a couple percent, right? So it really means nothing. And for me to come out here and tout how well we're doing would be, I think, a detriment to everybody. So if you want to discuss it one-on-one, feel free to give me a call. We can do that. Become an ARMR insider. We can chat one-on-one. That's part of the benefits of being an insider, quite frankly. William, Happy New Year. Thanks for the content. Man, thanks for watching and giving me that encouragement. I appreciate it. At what point, if ever, do you think the Fed will stop being effective driving equity? Isn't that the question, man? Isn't that the question? I don't know the answer. Nobody does. I don't know. I'm not going to equate the United States of America to Argentina, but I'm just going to give you an example that, just for the fun of it. When the Argentinians ran into their economic troubles and their currency totally collapsed, their stock market went berserk because everyone's getting out of the currency and hiding in equities. I mean, that's not what's happening. I don't think that's ever going to happen here in the U.S. I'm just giving you a kind of ridiculous example. Trying to call the top is almost important. It's almost impossible. And so at the ARMR Report, it's about reading and reacting. Just reading and reacting. I think one of the pitfalls for investors is coming up with a guess of what's going to happen. And when it doesn't play out that way, your ego gets in the way of you being able to execute right. So I try to avoid guessing like that. Alexander, Happy New Year, Brett. Thanks for the channel. Hey, man, Happy New Year, and thanks for joining. Thanks for being here all year. Southeastern. Hope you have a lot to smoke. Amen, Southeastern. Amen. Absolutely. In fact, it was fun. One of our insiders was talking, as I was asking them today in the Slack room, what should we rename these portfolios from aggressive conservative? One of them said we should name it the ARMR Sativa and the ARMR Indica, which is really funny. I mean, I almost did that. I thought that's a great idea, right? The swing portfolios like Sativa and the invest portfolios more Indica. ID Doc. I sold all my green energy stocks in the last 2 days. Went back to precious metals. My favorite EGO, MAG, right? Newmont. I need to go back to your insiders group. Oh, we'd love to have you back, my friend. And those stocks all look great. So, well done. Can you talk about Sienna? All right, it's the last question I'll go over. Sienna. Take a look at the chart. Well, I mean, look, Sienna looks great. I mean, the place to add to Sienna was down here, obviously. So, oh my goodness, I totally forgot, and I'm going to have to do it tomorrow. All right, on tomorrow's show, which is the last show of the year before New Year's, we're going to go over New Year's resolutions. That's what the show's going to be about, and I expect you guys to bring some resolutions. What do you want to do better next year as an investor? I'm going to share with you my top 4 thoughts. Anyway, one of those thoughts is to buy right. Okay, you've got to buy right. There's an old adage on Wall Street. You make your money in the stock market when you buy a stock, not when you sell it. That is so true. You have to buy right. So looking at, the first thing I say when I look at Sienna is the time to buy this asset is probably right in here. It made a double bottom, a clear double bottom. No doubt, ARMR Report, algorithms give us a risk on entry point right here as it goes above the 25-day moving average. I'm not sure. I'd have to go run the report, but I can guess that that's what that's going to be right there. Okay? And so anywhere up here, I mean, I can't chase the stock up here. If I owned it, it looks great, right? And I'm going to use the 14, the 9, the 14, the 25, or the 50, 200 as my stops. Now, if I'm an ARMR swing trader, if it's in my swing portfolio, I'm probably going to use the 14-day moving average. The yellow line is my stop. Certainly, I'll use the 25-day. But if it's in my ARMR Invest portfolio, I'm probably using the 200-day in this case. Okay? And don't forget, if you're looking at that stock, the smaller, and in this case, more aggressive stock this year is Infinera. These two stocks tend to run together. So best to watch them both. Okay? I wish you all a good night. Thanks for being here tonight. Happy New Year to everybody. See you all tomorrow. Please bring your resolutions for the new year as an investor. I can't wait to hear them. All right? Have a good night, guys. I'll see you on the flip side.